I hope you guys don't like sleep, because if so, I've got some bad news for you. The first 24-hour stock exchange has been approved by the SEC and will start trading in the coming months, probably pretty soon into the new year's. Now, everyone knew at some point this was going to happen. My estimate was about accurate, but I actually expected it to take a little bit longer. As soon as cryptocurrencies kind of came and started trading 24/7, and a lot of that got smoothed out, it was only a matter of time until the stock market followed suit. So, we're going to talk about this today about what changes to the market mean, how you can potentially adapt to them, what they potentially could do to your trading styles and your trading strategies. Now, this won't be you'll wake up one day and everything will change, but it will be a gradual change that will happen maybe over a number of months or a number of years as people get used to more and more this 24-hour market. I think this is an important video. I definitely think you should stay tuned to it. If you like it, make sure you share it with other traders, because I'm someone who I've been through giant market shakeups like this before when it came to HFTs entering the market, the computerization of the market, all of these things going down from trading in giant spreads to penny spreads. There's been a couple of these moments through histories that have changed the market and have changed trading. And I think it kind of behooves you to check it out and to take some time to think about it, especially over this holiday. So yeah, we're talking about the 24-hour stock market and how that's going to change everything. And let's actually start here, and we're going to start with retail, the benefits to retail traders. And I think there's going to be a lot to the retail traders that are open and able to adapt. I think there will be a lot of benefits to you, the ones who are stuck in their ways and can never change. I'm sorry, you're going to have some problems. First of all, I think stops are going to start working eventually. Maybe not off the bat, but eventually stops will start working 24/7 as the market moves 24/7. So this is stops for stop loss sakes, and this is actually stops for entries. I like a stock over $10. Well, before you would have to watch it trade over $10, punch in, or you would have to put in an order and hope it broke $10 between the hours of 9:30 and 4. Now, if you like a stock at a certain price, you can set out an order and you can walk away. This is how I trade crypto as well. I have lots of orders just existing out in the market. I think you'll be able to do more of that when this kind of thing happens. AM and after hours, I have put here as well. So PM and after hours, news events, trading. Again, you can already still kind of do this, but I think as the market becomes 24/7, ideas like an open and a close are going to be way more nebulous. So you're going to get more action during these times. And then also overnight. So think of Chinese equities, for example, that are traded on the US market. Well, now you're going to be able to take advantage if there's some sort of Chinese CPI, or if BABA has earnings, or something like this for Chinese or European, all these different equities that you can trade in the US, I think are going to trade a little bit more fluidly. And then last but not least, I've got set and forget. Right. This is how, again, I trade Forex. It's how I trade futures. You use things like alerts. You use things like automated orders. The people who are able to adapt and to use technology to benefit them, I think are going to have a super clear and easy way to trade. Now, the people who don't, I think, are going to have a hard time, because if companies start reporting earnings overnight, they're going to have to be there and sitting and trading overnight. Uh, what is a day trade in a world where the market is 24/7? You no longer have to get out at an arbitrary 4 o'clock when the market closes. If the market is open 24/7, well, or at least 24/5 to begin with, then what will happen is there won't be an open and a close. Things will react to news events. So, if Apple reports earnings at 7 o'clock at night, and then this other company reports earnings at 6 o'clock in the morning, these news events are going to take place, and all of the liquidity is going to happen when that happens, as opposed to waiting for the market to open. So risks, we got risks as always. Every time the market changes, things are going to change, and things are going to be uh, bad and then get better. That's generally how it works, right? When the computerization of the market took place, it screwed up a lot of ways that I had traded at the time. I was a scalper. There were some things that I did that I just couldn't do anymore as soon as the market got decimalized and HFTs took in and it got computerized, the market changed and it will change again. This will be a big change that a lot of us are going to have to think through. First of all, is liquidity and volatility. So, liquidity, if there is no open and close where all the volume is clustered around, it's going to be spread out. So, for example, if a stock trades 1 million shares a day, well, now it's got that 6.5 hours where 90% of that trading will take place. And if there is no open close and these topics become more fragmented and nebulous, what will end up happening is, because there is no open and there is no close, that 1 million shares is going to be stretched through a 24-hour cycle, which means that there'll be less liquidity in trading. Also means that volatility is going to increase for those securities, because if there's less liquidity, there is always more volatility. The more liquid an asset gets, the less it moves. The more speculative an asset, the less institutions and less hedge funds and everything are trading this, the more volatile that gets. So I think what's going to happen is you're going to get these cluster of trading around certain events. A big technical breakout, that is something that an algorithm looks at. Again, no longer does the algorithm need to trade between a predefined set of hours. If the stock is, use our example, or a stock is breaking $10, then and the algorithms are programmed by this institution, I want to buy this thing as it breaks $10. That happens at 2 in the morning. It happens at 2 in the morning. Right? The thing about systematized trading and the thing about algorithmic trading is you don't really need a human, right? So humans are there to monitor, they're there to come up with new ideas, they're there to test the ideas, they're there to do all this, but the actual execution is left to systems. And those systems can run 24/7, 365. And if the market's going to do that as well, it's going to be a massive edge to systematic trader. The next kind of risk or challenge I see coming up is market fragmentation. So, for example, let's say this new exchange opens up and you can trade 24 hours on this new exchange. However, the NYSE, which I know already has plans on doing 24-hour markets, maybe they don't get involved right away. Well, now you're going to have people who trade on the NYSE are going to put their liquidity in at certain times. People that trade on this other exchange are going to put their liquidity in at certain times, and this liquidity fragmentation could take place. Now, I don't think this will be a big risk for long, because I think what will happen, and what generally happens in capitalism, is you have a someone who sets the standard, say, hey, I want a 24-hour market, and they push that forward, and then everyone else comes and catches up. You're going to have the NASDAQ and the NYSE and the Amex and all of these different exchanges are going to start to catch up if they see that this thing has launched and it is successful in any way. Then why wouldn't you join? So this is going to be a problem to begin with, I think, but I don't think it'll be a problem for an incredibly long period of time. Now, let's talk about kind of the impact that we're going to have here to a lot of different trading strategies, and how I think this is going to affect everything. So first of all, right, we've got an order type mix up. And what I mean by that is that now you can trade with different types of order types. You better be able to. Again, using our example, I like this stock. If it breaks $10, I want to buy it. I want to put a stop at $9, and then I'm going to check on it in a couple days to see how my trade has happened. That's kind of order type is going to be a must for a lot of people, because if we skip to my bottom point here, the death of day trading. Right? What is a day trade? Again, if the market is open 24 hours. There is no open, there is no close. There is just kind of how crypto does, where at the end of every day, they usually use midnight UCT. That is the end of a day. And then the new candle starts, the new data comes through, but there is no open and close in the way that there is with the stock market now. So if there is no open and close, then day trading isn't really a thing anymore. What you have is short-term trading and long-term trading. And what will end up happening too is that you say, if you have a strategy that says, I'm going to buy this and I'm going to sell it at the end of the day, well, is that end of the day 4 now, or is that end of the day the actual end of the day, right? At 11:59 p.m. and then it resets over. Those are things that traders have to start thinking about, and this is kind of why this point I think is huge. Systematic trading is going to really shine in a 24-hour market, whereas discretionary trading is going to be much harder. The old saying, there is no good decisions made at 2 in the morning. There is generally no good decisions made at 2 in the morning, especially if you're talking about your finance and you're trading money. There's definitely generally not good decisions made at 2 in the morning. So what you're going to have to do is be more systematic about your trading and to plan the times that you are looking to trade, because there may be times in which you want to be around for earnings report or economic events or something like that, even if you become more systematic. But then it should be place your trade and let a system go. So, for example, if you're in a trade and there is no longer an end of the day, if you're in a great long that was generally going to be a day trade, well, now it's going to make more sense to say, I'm just going to attach a trailing stop to this one and go to bed. And wake up and the thing might be doing fantastic, or I could have been stopped out for my trailing stop, and that's fine. But it's going to be very important that you protect your brain and you make sure that you're doing things like having time away from the screen and sleeping and all of this, and you're not just someone who's saying, oh, it's 24 hours, I'm going to have to stay up 24 hours now. Obviously not possible and not beneficial. So think about different order types that you can do and to become more systematic and understand that I don't think there is going to be day trading and swing trading anymore. There's just going to be trades, right? They can be long term in nature or they can be short term in nature, kind of like how you do in Forex. Some people say, I'm a Forex day trader. That's fine, right? They close their position before the hour that market is closed, and then they open up new positions the next day. That's fine. You just need to rethink of these things, because if the market is going to go fully 24 hours, this mold is broken and it's time to sit here and rethink things into first principles. So, um, let's do a little bit of conclusion, right? So, change happens is the first thing I have here. Change always happens in the market. Again, when I was trading, there was an actual guy on the floor in a funny coat, and that person made the decisions of whether the stock was going to go up today or down today, right? What the liquidity of it would be. Sometimes he was just trading against himself all day. Uh, that was how it worked. And what happened is, over time, as more and more people entered the market, that person's power waned dramatically. And then HFTs came in, and the guy in the funny coat is no longer there, or is there just assisting algorithms, right? So changes happen. They will always happen. It's just kind of the way it works, right? So get ready. Start now. Start trading maybe Forex a little bit. I always say you should open a crypto account, even if it's only with $100, and start to play with, because it's time to start playing things to place orders, in a way that you can make sure that you're not behind the curve. You're used to then setting out orders that have stop losses attached and trailing stops and all of that kind of stuff. You just make sure that you have practiced that so that you know, okay, I'm going to like this stock at a certain amount. Let me set up my alerts or set up my orders in advance, and then let that play out. This is how a lot of successful traders trade anyway. I just think there'll be more of that going on. And get systematic, right? Stop trading based off feel. Your feel will suck at 2 a.m., I wrote. You have to have some sort of systems in place to say, I'm going to buy when this happens and I'm going to sell when this happens. There are people out there who still just look at the charts and look at a story and say, I think the story's good and I think the chart's good, so I'm going to buy some when the market opens. The problem is, if you have to make these decisions at night or in the morning, they're going to be bad decisions. So you need to make sure that you understand that it's okay to make that decision when the market's closed, and then set it up and then push from there. And then lastly, practice. And, a little plug for myself, my website, statsedgetrading.com. The reason is because this is already how I trade. This is why I'm super excited about it. I know some people are scared, but I'm a systematic trader. I have everything set up on the weekends. I run my reports. I run my systems. I run my back tests. They say, maybe look to buy this stock if it reaches this price, or this stock if it reaches that price. And then all I do is I wait. I wait for the alerts to come to my phone or my Apple Watch or my TV or my iPad or whatever I've got in front of me at the time. And then I bring up the chart and I see if it's something I want to do. And if I do, I just hit a button. That puts out the buy the stock. There's the stop loss. Everything is systematized from there. So practice that, even if it's in paper. It's probably a good idea. All of these different things. Make sure you're practicing this, because when this shift occurs, It will probably occur quicker than people think it will. I think there's going to be an approval, an exchange, probably won't have a lot of liquidity right off the bat. As things happen more and more, you're going to get more and more liquidity that's going to happen. You'll have more and more institutions and HFTs and all of this that will end up entering the system. I think you'll have the other exchanges catch up, and I could see in a year, maybe two, maybe three, open and close isn't something that really matters anymore. You trade when the stock breaks the level you want or gets to the level you want or has the news event you want, but you just kind of trade when and where you want to trade. Last kind of point is I would email your software provider now and ask them what their plan is for a 24-hour market. If they don't give you a clear answer, I think it's time to start looking around at different software providers just to make sure, because if they're not already planning on what to do and they don't have a plan in place, it's going to be really hard when this happens. So imagine, your broker, for example, you put out a stop loss order or you put out a limit order that should get filled and then it didn't, and it would have been a great trade, or it would have gotten you out of a good trade. Imagine, you set an alert and that alert should be pushed to you, but it's 6 o'clock at night and their servers are shut down. It doesn't get pushed to you, right? Make sure that whatever tools of the trade that you use have some sort of plan to adapt to this 24-hour market. Again, this won't be a wake up one day and everything has changed, but the fact that the SEC approved it means we are on this road. It's only a matter of time. It's either months or potentially a couple of years until everything is fully 24-hour and systematic. At least that's what I think. Let me know what you guys think in the comments down below. Took a little bit more time in this video to do the presentation and script all that out. Let me know if that's something that's worthwhile. Again, share this with your trading buds. I think this one's going to be important. It's going to be one of those big changes. I look back in 10 years and say, yes, I was there for the computerization of the markets and the HFTs and the change to 24-hour markets.